Good day, Money Masters and Treasure Hunters. Welcome to the August 26th magnificent Monday edition of today's Closing Bell on the Tom O'Brien Show. I'm your host, Steve Rhodes, filling in for Tom while he's away for the evening. We had the Dow finish down 63 points at 14,947. The S&P down 7 at 1656. The NASDAQ flat at 3657. Russell 2000 up 20 cents at 1038. A flat day out there as well. Same thing with the King dollar up a penny at 81.40. Goldilocks up $6 at 1402. Silver up 58 cents at 24.31. Light sweet crude down 18 cents at 106.24. The bears are still in control of the markets, and that check engine light is still on the engine of the markets. Now, folks, if you're not familiar with me, I'm the morning anchor here at TFNN. Kick things off at 9 a.m. for the first 2 hours of the trading day. I use a set of trading tools that include leading indicators such as that lightning bolt pattern, also known as the A to B equals CD, Fibonacci expansion and retracement, Gartley and butterfly patterns, swing point analysis, volume analysis, divergence between price and other indicators or oscillators in order to call the markets. I've got a newsletter service, Mastering Probability. It's out by 8 o'clock each morning. It covers the futures, the Forex, commodity, and stock markets with trade setups and a thorough review of each of those charting patterns. Now, this show is about you, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. This is the tool I call Chance Favors the Prepared. Now, opportunity knocks at the door many more times than most people realize. And if the moment of opportunity is not seized, well, it may be because people just don't recognize it or they are unprepared to seize it. True story. Back in the 30s, early 40s, during World War II, a young man was seeking a job as a Morse code operator. He answered an ad in the newspaper, went to the office that was in the address in the posted ad. When he arrived, there was a hustle and a bustle and a noise that included the chatter of telegraph keys in the background. A sign on the wall instructed applicants to take a seat and wait until they were summoned. Now, more than a dozen other applicants were already in the waiting area, and instead of being discouraged, this young lad figured that he was prepared and decided to wait it out and took a seat. Now, after about 2 or 3 minutes, this young man got up, walked over to the door where the sign was hanging, and walked right in. Naturally, the other applicants perked up and started looking at each other, muttering to themselves. About 5 minutes later, the young man came back out with the employer who said, "The rest of you may go now. This position has been filled." One of the applicants spoke up and said, "I don't understand. He was the last person here, and we never got a chance to have an interview, and yet he gets the job? That's simply not fair." "I'm sorry," said the employer, "but you see, all the time you've been sitting here, the telegraph key has been ticking out the message in Morse code. If you don't understand this message in Morse code, or if you understand this message in Morse code, come right in. The job is yours." Apparently, none of you heard this message. This young lad did, and the job was his. Now, folks, opportunity is now knocking at your door right now, this very moment. It's not in Morse code. It's TFNN's virtual trading competition. $10,000 in cash awards, 70 prizes in total. It's an opportunity, folks, that you want to take advantage of, and you want to do it right now because seating is going to be limited. You've got to sign up by Thursday, September 5th. That is next Thursday out here, and time is going to fly. We got a holiday weekend coming up. 10 overall winners are going to receive cash prizes up to $3,000. 10 runners-up, they're going to receive an autographed copy of the best-selling book, The Art of Timing the Trade. 5 randomly drawn winners each day are going to receive $100 each for just placing a trade. $2,500 in total. Folks, opportunity is knocking at your door. The contest is going to begin September 9th, but if you're not signed up by September 5th, you won't get in on all of this action. So do yourself a favor. Go over to the homepage of TFNN.com. Sign up right now. It's TFNN's virtual trading competition. All the details are on the homepage of TFNN.com. Let's go check out these markets here right now. The S&P closing out at 1656.78, running right into the bottom of this rising price channel. This is a price channel here. If you're watching us on Tiger TV, you can see my charts out here. This is a rising price channel that we're taking a look at going back off of the November 16th lows out there. price today stopping right dead in its tracks. As I said, the Bears still have control of the market. The Bulls had the opportunity, and up till about 2:30 this afternoon, looked like they were actually going to go ahead and take charge. All that the Bulls needed to do today was get to 140 net advancing issues in the New York Stock Exchange. But no, the Bears stage a late day comeback here. We finished the day with a minus 536 net declining issues out there. The Dow, of course, is the weak link. It was down 64 points. The S&P is the second weakest link out here. We'll see if it can bust out this rising price channel in the morning. Right now, as we speak, the markets have moved into what I'll call an oversold condition. Now, it's a dangerous condition to run into at about 4:30 in the afternoon, which is about, where we're at. We're at 4:15 right now. And the reason is, in fact, I'm going to go over and we'll take a look at that first, just so you can kind of get a setup, not so you can so you can get a setup and a feel for what could take place overnight, what could take place when you come in the morning out here. Now, as we take a look at it, prices, and we're taking a look at the ES Mini, the 30-minute chart here, traveling out at 1653, and 1653 is a support line out here. So the very first thing is, if you come in the morning, that is assuming that you haven't tuned into my shows at 9 o'clock to understand where the markets are going and what they're doing and so forth. But right now, 1653 is a support level. So long as price holds 1653, even though the Bears have control of the market, we're going to see that they only have control of a couple of the indexes. They don't have control of the entire game out here, and that's what makes this situation, makes this market a little bit, we've got some bullish signs on a couple indexes, the NDX, the composite, the Russell 2000. We'll take a look at that. You've got bearish signs certainly inside really only inside the Dow. The New York Stock Exchange, New York Stock Exchange as well. So the NYSE as well as the Dow, you've got some bearish signals out there. And the S&P 500 inside the ES Mini, the S&P futures right now, not until we see a crack below 1653. But this wide-ranging bar that came in, it doesn't really matter whether it was because of the John Kerry. And it wasn't really the announcement. It was just simply, it seemed like it took a little while before people said, hey, maybe there's going to be something a little bit more to this chemical weapons issues over in Syria. And I don't know. I don't really trade the news. Instead, and it's easier just simply to go ahead and trade the chart patterns out here. Now, the real key is an oversold condition needs to work its way off. And here's how this happens. It'll get worked off by either moving sideways, much like you might do, or I'll say much like I do on Thanksgiving. Because Thanksgiving, I wake up, I go play a nice round of golf, maybe have a beer or two, come back, then eat a big, huge dinner. Usually end up with taking an extra serving. That means more than two. And then say, why did I do that? I don't know if you've ever done that before. And then you sit on the couch and you let that work itself off because you don't really feel like going for a jog. By working itself off, it's just simply a market going sideways, and that's what could take place overnight. If all that the market really does overnight is trade in between the 1653 to maybe the 1659 level, that's going to be a market that's moving sideways, building up energy, perhaps to go ahead and bust out this 1653 level, because the Bears truly did take control of the market. Well, they didn't take control. They still have control of the New York Stock Exchange. And that's important because that's a wider breadth, that's a wider swath of the marketplace. On the other hand, should you wake up and should we see that the ES Mini, the S&P futures, for whatever reason, have bounced and they're trading above 1664 out there, well, that may not be the time to jump onside the short side. What you'll want to do is tune in at 9 o'clock in the morning. I can give you a better feel for what took place overnight. Now, let's go take a look at each of these indexes. We'll go take a look here at the weak link. Let's take a look at the Dow first. So when we take a look at the Dow, what you're watching, what you're taking a look at, you're seeing a descending price channel that the Dow has been traveling in. The top of the channel really beginning here on August the 5th. You can use the open, or you can use the open, which is 15,655 out there. Your next touch point, in order to come up with the channel line, go ahead and use the high of August the 14th out there, 15,453. That's going to set the upper boundary of the rising price channel. Your next line, assuming that you don't have a parallel line that you can draw, go ahead and use the open of the July 23rd candle. That's at 15,547. Go ahead as your next touch point. Go ahead and use the August 19th close. That's at 15,010. You'll see the price channel. You'll see that price is traveling in it. Inside of the Dow, what it wants to do, because there's a high volume low down at June 24th, and it's going to be the first one that is down there, the top of which is 14,795. Now, the Dow is coming down on light volume. It's summertime, and there's not been a lot of enthusiasm in the sellers out here because volume has been light. We'll be right back, folks.